Hello students, welcome to Mr. Chike classes. In our tutorial today, we are going to cover the basic accounting equation. This is our question and this is our answer book. In our tutorial, we are going to cover transaction 1 up to transaction 7. In our next tutorial, we are going to cover transaction 8 up to transaction 10. In the tutorial after that, we are going to cover transaction 11 up to transaction 14. These tutorials are divided like this because of the nature of transactions. So today we are going to cover cash transactions. You might be wondering, what then is the basic accounting equation? So the basic accounting equation states that assets is equals to equity plus liabilities. In simple terms, assets refers to possessions of the entity. So possessions of the entity should equal the financing of the business, right? So the possessions of the entity means what the business has. So what the business has should equal to what financed that, right? Because a business can be financed through equity or liabilities, right? So if you want the actual definitions of these, you can come here whereby we have a definition of assets, definition of liabilities, definition of equity, definition of income, and definition of expenses. We are not going to go deep into this. All right, and we also have examples of those, examples of assets, of equity, and liabilities. All right, so in accounting, we have what we call double entry. For every transaction that we are going to see here, right, we are going to have debit entry and credit entry. What does that mean? We have what we call ledger account. So a ledger account has the debit side and the credit side, right? The debit side being the left hand side, the credit side being the right hand side, right? Okay, let's go back. All right, so assets have a debit balance, which means that they increase on the debit side and they decrease on the credit side. Then this side of the accounting equation has a credit balance, right? So this side of the accounting equation, debit balance, this side of the accounting equation, credit balance, right? So if we have an asset account, it means that it is going to increase on the debit side and decrease on the credit side. Why? Because assets have debit balance, right? If we have a liability account, it means that it is going to increase on the credit side and decrease on the debit side because liabilities have a credit balance, right? Okay, let's go through our transactions. Amanda Zulu started her business as Amanda Traders on 1 January 2022. The business trades groceries. The following is a list of transactions entered into by the business during the month of January 2022. The business uses perpetual inventory system. Transaction 1. Amanda Zulu deposited 50,000 into the business's bank account as opening capital, right? So this was deposited into the business bank account, right? Okay, so the bank account increased by 50,000, right? The bank account increased by 50,000. And remember, the bank account is under assets, and assets have a debit balance, which means that they increase on the debit side and decrease on the credit side. Okay, so we are going to debit bank, right? We are going to debit bank, which means that we are increasing the bank account, right? We are increasing the bank account. We are increasing the bank account, which is one of these assets account, right? Okay, then so remember we said we have what we call double entry. For each transaction, we are going to have a debit entry and a credit entry. So which account is going to be credited? Okay, Amanda Zulu deposited 50,000 into the business's bank account as opening capital, right? So the account that is going to be credited is capital. and capital falls under equity, right? Capital falls under equity. Capital increases equity, right? Capital increases equity, and equity has a credit balance. So if equity has a credit balance, let's come here. If equity has a credit balance, it means that capital is going to have a credit balance. Why? Because it increases equity, right? So it is going to have same behavior as equity. Drawings, debit balance. Why? Because they decrease equity, right? So since they decrease equity, they are going to have opposite behavior, right? Then here, income, credit balance, because income increases equity. Expenses, debit balance. Why? They decrease equity, right? Okay, the more we have income in our business, the more equity is going to increase. The more we have expenses, the more equity is going to decrease, right? Drawings just mean that the owner is taking equity out of the business. That's why this decreases equity, right? So since capital of the business is increasing, equity is going to increase, right? Then we are going to credit capital. We are going to credit capital. Here we are going to have 0. We don't have a liability there, right? We are going to have 0. So our accounting equation balances plus 50,000 is equals to plus 50,000 this side. Then we have debit and credit. Let's move on to transaction number 2. All right, transaction 2, acquired a loan from PTI Bank for 25,000. So when you acquire a loan, it means bank account is going to increase, right? Is going to increase with proceeds from loan. Okay, so we are going to debit. We are going to debit bank. We are going to debit bank. Since a bank account is an asset account, it increases on the debit side, right? Okay, so another account which is affected is the loan account, and it is a liability account. So a liability account here which will increase is loan. So we are going to credit loan, right? Remember, whenever a liability account increases, we are going to credit, right? Because a liability has a credit balance, right? A liability has a credit balance. So it increases on the credit side and decreases on the debit side. Okay. Transaction number 3. Transaction number 3. So our transaction number 2 balances plus 25,000 is equals to plus 25,000. Then debit, credit. Okay. Transaction 3, bought goods for resale to the amount of 8,000 and paid by EFT. Okay. So there are goods which were bought for resale, right, to the amount of 8,000. So our bank is going to decrease by 8,000. So we are going to credit bank. We are going to credit bank, right? Remember, a bank account is an asset account. Whenever it decreases, we should credit it because it has a debt balance, right? Asset account, it has debt balance. So whenever it decreases, we credit, right? So we have just created our bank account. So which account is going to be debited? We are also going to have another asset account there called inventory, right? We have another asset account there called inventory, which is going to increase. So whenever an asset account increases, we debit. So we are going to debit inventory. We are going to debit inventory, right? Because these are goods that were bought for resale. So this is our inventory, right? So we are going to have 0 here, and we are going to have 0 here, right? So minus 8,000 plus 8,000 is 0, right? Then 0 is equals to 0. Credit, debit, done there. Okay, then number 4, sold goods to the amount of 20,000 for cash, right? Sold goods to the amount of 20,000 for cash. So for now, let's end here, right? Then we'll proceed. So our bank account is increasing, right? There's an inflow there. There's an inflow of cash there, right? Okay, our bank account is increasing, so we are going to debit bank. We are going to debit bank because a bank account is an asset account. It increases on the debit side, right? Okay, so since we have debited bank, the other thing that we have there on this transaction is increase, right? Increase of equity or income. So we have income there, which increases equity 20,000, and the income account there is sales, right? So we are going to credit sales. Remember, whenever equity increases, we have to credit because equity has a credit balance. So we are going to credit sales. Right here, we are going to have 0. So plus 20,000 is equals to plus 20,000. Debit, credit. Then transaction number 5. Right, transaction number 5. Okay, so before we move to transaction number 5, all right, we have to finish off this one. These goods were previously bought for 8,000. These goods were previously bought for 8,000. So since they were previously bought for 8,000, do you see that when we sell them, right, we are taking our inventory out of the business, right? Because inventory that has been sold, it will not remain in the business, right? It will go to the customers. So we are taking our inventory out of the business. So if we don't show that here, it means that our inventory account is going to remain with a plus 8,000, but we should decrease it since we have sold that inventory. So we are going to subtract 8,000 here, right? So when you subtract 8,000 there, we are going to credit inventory account to show that this inventory has moved out of the business. Then the account that we are going to debit, is cost of sales, right? The account that we are going to debit is cost of sales. So we are going to debit cost of sales. So this part calculates profit, right? Remember, we sold these goods for 20,000, right? And when we bought these goods previously under transaction number 3, we bought them for 8,000. So 20,000 minus 8,000 is cost to profit, right? That's why we debit cost of sales. Cost of sales simply means that cost of the goods that have been sold. So this is just the buying price of the goods that we have sold now. So the difference between the two is profit, right? Okay, so credit here, debit here, minus 8,000 here, minus 8,000 this side. Then done with that transaction. Transaction number 5, paid wages of 2,300 by EFT. All right, so we can see an outflow of cash there, 2,300. So we are going to credit bank, right? We are going to credit bank because it is an asset account that is decreasing, so we'll credit it, right? An asset account has a debit balance, right? Okay, then wages are expenses. So expenses decrease owner's equity, so we are going to decrease our owner's equity by 2,300. And the account that is going to be debited there is salaries and wages, right? That's the account that we are going to debit. We are going to debit salaries and wages. So remember here, let's scroll down. We said expenses have a debt balance. Why? Because they decrease equity. They are opposite of equity, so they have a debt balance, all coming from here. This side of the accounting equation has a debt balance, the other side credit balance. Okay, so we're going to have 0. So credit, debit this side, right? Then minus 2,300 this side, minus 2,300 this side. Then we move on to number 6, right? Number 6, bought a computer for 6,000 from SA Computer Traders and paid by cash. So this computer was paid for by cash, minus 6,000, right? Credit bank. All right, so we have credited bank, and this is computer equipment. So it is not going to be inventory because in our business, right, we are just saying we are the accountants of this business, right? in our business we are buying and selling groceries. So since we are buying and selling groceries, computer is not going to be inventory. It is going to fall under computer equipment. So this computer was bought for office use, and right, so we are going to increase an asset account called computer equipment. Computer equipment, right? Computer equipment. So it means we are going to have a minus 6,000 plus 6,000 is going to be 0 here, then 0 here, then 0 here. So 0 is equals to 0 this side. Credit and debit, right? Then let's move on to transaction number 7. Amanda withdrew 150 from the business bank account for private use. Do you see an outflow of cash there? So we are going to credit bank, right? Because remember, it increases on the debit side. So once we have credited bank, the other account that we are going to have here is drawings account. And we say the drawings reduce, or sorry, drawings decrease, owner's equity, right? Because this is the owner who is taking equity out of the business. So they are going to be opposite of equity. So since they are opposite of equity, we are going to debit, right? So we are going to have a minus 150 equity which is being taken out of the business. Then we debit drawings, right? We debit drawings. Right here we are going to have 0. So minus 150 is goes to minus 150. Credit and debit, right? Then we are done with these transactions. In our next tutorial, we are going to deal with credit transactions, right? Then we'll also deal with general transactions and a few cash transactions, right? So this is the end of this tutorial. See you in the next one. Thank you.